Yo. Hello. Can you hear me? I can hear you. Right. So here's what I want you to do. Right. You have your computer. Open up your Top Step dashboard where you bought your account, and then you're gonna go to accounts on the left side. I'm screen sharing it for you. And then go to add-ons, and then activate your free practice account that you get. Yep. And then, yeah, it's free. It's not technically free. You just need to have a live, you just need to have an account with them, like a practice, like a test account. And then you can paper trade in there. So you're just gonna click like subscribe or whatever, and then open up your Top Step X. Yep. And then it should pop up as a 150K practice. Yep. And then in here, everything's the same, but nothing's real. Right. Okay. So yeah, where's your first question? Let's go over that. So with the buying and selling, right? So we're in market, and if I say I want you to sell something, you would click the red button. Yeah? And, or if I might say, let's go short here. You know, whatever contracts, like 1 or 2, you would just click the red button. And then we have this setting turned on for you. This profit number, it's 400 for you. And then we have this selected, right? So, well, let's say, I'm in a position, or we're going to get into a position, and then we're like, okay, I want you to sell 2. Boom. You would just click sell 2, and then your profit target automatically populates. It gets triggered. Okay. If this market comes all the way down here, then that's $400 worth of profit, and you're done for the day, right? So when I say, for example, let's get break even, well, it's not going in my direction right now. But let's say, how would I explain this? So let's say, let's say it was like down here. Whatever, wait. So you see me moving everything and stuff, right? I'm screen sharing for you. So let's say it trickled down over here, and then you would break even by doing this, correct? That's how you break even your trade. If it's going down in our direction, that's how you would do it. So you get out earlier than expected, Right. And then let's say we were in a buy, so I can actually get rid of this now. And then let's say we're in like a buy here. So now if it goes up all the way up there, then that's $400 profit, right? So okay, wait. If it goes up a little bit more, then I can actually show you like how to break even, So well, it's going down now, so it's hard to explain. So if it goes up like this, right, but it's not there, then I would just be like, oh, okay, break even right now. So it's got to be above where you bought from, right, because we're in a buy position. So let's say it goes up like $150 and you don't want to lose any money. You would just hold on to, the buy order here, and you would just move it up. And then it'll be and that's what you call break even. Now it's actually dropping. So let's just switch. Because we are at all-time highs right now. So I don't know if you know, but we got, well, good news, I guess, over the weekend. Trump's like, oh, we had such a good meeting with China. We're gonna do something amazing, whatever. So the market pumped up 200 points. This is a huge move, by the way, huge. This is what we call a gap up. So when the news is really good, the market, there's just so many orders, millions of orders that are so bullish, meaning it wants to go up, right? That it just gaps up at this new price. It doesn't even go through like, oh, 500, 550, 600, whatever. It gapped up straight to 700s, 200 points. Okay, huge. This is huge. And now we're just up here now, you know? Like, look at this. Look at our EMAs just shot up, right? And it's so fast that our VWAP didn't even catch up. You know, the average is still at like 25,624 with the volume. So it'll take like a little bit for it to catch up. So, yeah, we're just going to be trickling upwards, you know, this next week. And we also have a lot of economic data that's going to be coming out. So it's going to be really telling of where we are, you know. So, yes, this is good news, but we can still come down a lot too. We can eat up this entire move really easily, you know, but we just need to get the news that's bad enough for it. But, yeah, so far, oh, yes, look, now it's coming back up again, right? Oh, yeah, it's coming down, so we're in the right direction. So, yeah, see, let's say you got short here, and I told you to get short, boom. I would ask you to do this, and this is break even right now, right? So, if it comes back up again, okay, right now, this is like, okay, it's going in my direction. I was right about the trade, okay? But if it doesn't go down all the way to meet my profit target, I would just do this so I don't lose out on any money, right? We went over that. That's break even. So you would just do that by, you know, dragging your thing like that. And then as time goes on and it gets lower and lower and lower, you would, you know, bring the order down, you know, along with it. So this candle is going to close in 2 seconds, right? So I'll tell you where to place the second one. It's going to open right now. Boom. Now I'm going to place it here. You know, this is called trailing my stop. This is my stop order, okay? And this is my take profit order. So I'm going to keep trailing it with the candle. So I just want that momentum to just keep going down and, you know, get me to my profit target, right? So we're just playing the momentum. That's it. Nothing crazy. So now it's right here. And then the next candle, let's see if it closes right here and it keeps going down. I would bring it down more, you know? So right now, if I'm wrong, if it still goes back up, I come out with $130 profit, you know? And then if it keeps going down, then I leave with my full $400 profit, you know? So let's see how this candle closes. Let's see if it takes me out. Say, there we go. It closed like that. It took me out for a $130 win, right? So that's what I mean when I'm in a trade. I'm like, okay, break even right now. You know, that's what I mean. Depending on the order, you're just, you know, putting another order right above it to, you know, take you out or whatever, you know. So does that clear things up for you a little bit? Yeah. So it doesn't matter what direction, right? When I'm in break even, just go in that direction. If it's a buy order, then your break even is going to be up top. Okay? If it's a sell order, then your break even after it breaks it, it's going to be like, you know, right above it, right? So you're saving your money, you know? So, yeah. That's what I mean. So if it goes down, I already showed you that example. Let's see if it goes up from here because we are kind of bullish or very bullish. So it might easily just go back up, you know. So if it goes back up, then let's say I'm up $100, same thing. I'm going to break even like boop, you know. I'm going to take profits like all the way up here, you know. Yeah, my take profits all the way up there. So see, it took me out again. So let's buy here. My stop loss is going to be right here. Okay, let's say I'm wrong. I'm going to lose $100 here. And if I'm right, it's going to go all the way up there, you know. And then this is my stop loss, right? And I'm just moving it up as it goes in my direction. Yeah. Yep, exactly. Yes, that's how much we're risking to lose. Yes. So, we have that always, but since our strategy is sort of a scalping strategy, we want to protect our profits closely. So we just, so this is where we got invalidated, right? So we were completely wrong, and now it's just gonna come down a little bit more because look at this wick; it's crazy. So in the time being, we're gonna come down a little bit, but yeah, that's what I mean. So yeah, so the trades that we wanted to take, right? In on what day was it? Friday. So Friday, let's see what happened on Friday. So these were some. So after you got off, there were some really good opportunities. Um, so immediately we took. This was the trade that I wanted us to take, both of us to take, and this was the short, right? So we kept. I was talking about how we were pumping for so many minutes in a row. I was like, okay, the 15-minute is about to print, so let's take a short. And this is like the 10-point short that I was talking about. Nothing crazy, but still pretty good. And then look what we did here. Just like how the wait, let me maximize this. Just like how the oh what the oh whoops sorry wait change stream. I'm just gonna change my screen. There we go. It's because I was sharing my application and not the screen. So just like how the top of the 15-minute orb and the bottom of the 15-minute orb are important, the midpoint also plays some significance too. And we can see this almost like every day. So that was the day. Well, if it comes down there, but look at this one. It broke out. This is Thursday. It broke out. We came back. Oh yeah, we were live this day too, or we were talking. See, or tested the high of the opening range and then boom, pushed up. Like you don't even. This is all you need. All we need is this from boom to boom. Like that's it. We don't even need all this. If we get all this, that's just even better. But our $200 to $400 is just here to here. That's it. We just have to be right a little bit. So this is I think we went over this. It's called a retest. This is called a break. We break out of the 15-minute range. We come down and then we retest this area to keep continuing upwards. Okay. So it plays a huge role. See, look at this. We come down, we go up. Okay, so now we're rejecting at the high. Okay, we came back up, rejected the high again. We came down a little bit, rejected near the high, like 2 points, and then we came back down. And then what are we making here? Lower lows. Yes. So the structure is definitely changing, so this is a lower high that we made and then boom, we broke. So I have a little indicator here, like a little marker saying we broke here. And then as soon as we break, boom, we're flushing, right? And then what do? Look at this. We hold this whatever random area. We come back up to the orb lows this time, retest from the downside is what we would say, and then we come down, continue downwards, right? So this is retest from the downside. Exactly. So these 3 points, right? The high, the midline is what we call it, and the orb low. These are all 3 important areas that we want to watch out for. Like it's not gonna be exact, the mid or the high, whatever, but it's gonna be around those areas. If it's stalling, that's a pretty good sign that we are going to just, go the other way, So because we want to see momentum there. That's what we're trading. We're momentum traders. So if it's not there, then then we just don't do anything. But yeah, let's see. So if it's trading with a lot of momentum, let's say it's holding really well, and whatever, we can say, okay, we would aim for these areas as profit targets. We would aim for the midline. We would aim for the high. Like, okay, it's at least gonna go there. So we trade within those zones pretty much. Another good example. See, So we held the lows here and we came back to the midline and then we got rejected there. Okay. And then see, a close like this is a really good indicator saying that, there's a lot of selling pressure at the midline, right? And then we can expect it to go back down to the orb lows. So this is a trade that I took on Wednesday before we started trading on call. So, rejection at the midline, come back down, and then we're choppy. Like, we're not here for this, right? As soon as we hit this trade, like, this is winning. This is it for us, or for me, If it comes down from here to here, I'm done, okay? I don't need to look at the rest, but for people who are waking up later and trading, like, throughout the day, this is good, We're chopping around the low. Okay, we finally go up, and then you might get trapped into this, seeing, okay, we closed above the midline, boom, oh, we're going to go up now. That is a thing, like, this is a trap, right? It's not always going to be perfect, but you have to be ready for those losses because this is the first time we've seen it, like, not work here, right? And then we get rejected again, we chop around, we go back up, we retest it perfectly, we hold it, and then this time we have enough momentum and we go up, and we go exactly to the orb high, right? And then we come down. So it's like a choppy day. Not clean at all, super choppy, but we just want that one clean trade and we're done, So let's go again to, oh yeah, this is just super clear day. We as soon as we get above it, we come down and we're making higher lows this time. Higher lows is a bullish structure. So low, the second low is higher, so we just continue upward like crazy. So you want to see the trend as well as the structure, and to see if it's like aligning somewhat with the strategy that you're using, you know what I mean? That's what's important. So yeah, look at this. It's crazy. We break up, and then we're making higher lows. So higher lows, we bump up, but then we can't make it no more. And then we come back down, and then we retest this low area perfectly, and then we go up. But even then, look at this. It's like a midline. It's like 1 point away from the midline, we go up back to the highs. And then we try to break down, we go up. And then we're finally breaking down lower, but then we just shoot up immediately as we get a lot of buying pressure from the low here, and then we just never revisit that area again. We just keep going up, and then we finally did. I think we got some bad news or whatever, but yeah. So this is what we're looking for, right? So you don't got to be scared. So when I say enter, it's like there's gonna be trades that we're gonna be losing, but you have $3,000 to lose, and the probability of us losing $3,000 in a row from bad trades is like statistically so low, you know what I mean? So you have your profit target, and as soon as you hit it, like, you're done for the day, so that's all we need. So yeah, it is scary to lose money, I get it, but you just can't do it, you just can't make money. But yeah, this reject, this was on Friday after you left. This trade was also like really perfect, perfect rejection from the lows, and then we just held orb high after up until the end, because selling pressure just gets really crazy around noon. It's just as volatile as like the beginning hour, so pressure gets crazy and we just trickle down a little bit. This is nothing crazy, but we just start trickling down. So but yeah, till then we held that orb high perfectly, boom. It's called the power hour. So the market closes at 1, right? So it gets a little hectic. There's options that expire. So there's daily options and there's weekly options. This is like a completely different market, but it's all tied together. It's all traded on the same, like, NASDAQ and SPY and all that. So it just gets a little volatile towards the end as those options are expiring, because the way they make money is if, like, the option reaches a certain price, it's like a certain amount of money is made. So when those things expire, then it gets a little hectic as they're expiring, because they expire at uh, 2 o'clock. No, they expire at 1 p.m. So an hour before. So it just starts, like an hour before that happens, which is 12, starts getting a little crazy. And then it just dies off, like the remaining hour that the futures market is open. So, because the stock market closes at 1 p.m., and our futures market, the stock market close is 1 p.m., and the futures market close is 2 p.m. So, right here, at 2 p.m., we're closed, and then you don't see nothing, right? So, it's kind of dead after when the stock market closes, from here, but the last hour leading up to the stock market close, it gets a little crazy. So, yeah, that's pretty much it. And there's also more that I wanted to say with the orb. Like, what are all these lines, So these lines is basically like standard deviations of the 15-minute opening range. So this is like likely areas where price might go to if we are really bullish, and where price might reject as well. So as if you can see here that, there are some like instances where these lines do act like support and resistance, it's like very not perfect at all, but it's just things to look out for, like, okay, so we came down, and then this is the first standard deviation. Okay, we're coming back down, and we're holding the second standard pretty well. We're gonna go back up to the orb low, and then and then we're trickling down, and then we're holding the whatever fourth standard. So it's nothing crazy, but it's just something to keep in mind, as like profit targets. The reason why it's there is because, let's say you're using your orb to trade, right? And you don't know where to take your take profit, all the levels are way too far, and you don't know if price will go all the way down there, because that seems a little crazy. So that's when we use those standard deviations as take profits, So it's pretty much this chunk here that's being, mapped onto the chart like there, So this half of the range of the orb is one standard deviation upward. So that's what that is. So this chunk to this chunk is equal to this type of thing. But that's standard one. So that's what we have them. So for example, real quick example. Okay, so price is all the way here and it's rejecting, right? You don't know. It's so like for right here, price is coming down crazy right here, right? We don't know where it's gonna go to. It might go to here, but it might also you might. This is an important area. This was that CPI we were talking about on Friday, inflation report. So we're like, okay, well, this seems like a really good place for price to come down to, but this is a crazy move. You don't know if it's going to come down all the way here. So just like how we use, our orb low as a profit target, we might, if this seems too good to be true, so we put our target here, right, and it works out. So, that's the sort of scenario that I'm talking about. Orb low is also, it's our support and resistance. So we use those standard deviations as profit targets or stop losses as well. So, yeah, that's why that's why you see those lines here. But it's nothing crazy. You don't need to like remember it or anything. But it's just there for when you need it, sort of thing. So, but yeah, I'm really interested to see how tomorrow will be. We had crazy good news, but we also have news coming out. So this is another thing that I want you to start doing before you hop on, right? Let's see. What is it called? Forex Factory. So this is Forex Factory, okay? It's a website that has all the news that we would ever need to keep in mind. Oh wait, we don't have news. Oh, it's not tomorrow. It's this week. So what news are we getting this week? Oh yeah. So we have our FOMC statement. So this is our interest rate statements. That happens every quarter. So the FOMC is the Federal Reserve. So those guys, they put out like, oh, how's everything looking? And how's like unemployment looking? How's inflation looking? They talk about it and they adjust the interest rates if necessary. So that is why it's a important thing. So we don't care about any other country except for us. And then we just click yes. And then so federal funds rate and our FOMC statement, it's all coming in tomorrow. So do you know what the federal funds rate is? Okay, so what this is and why it's important, right? So the Federal Reserve, they are the ones that give money, lots of money to banks, okay? And the government gives banks money at a certain interest rate, okay? So this is around 4.25%. It's the lowest interest rate that they can give money out to, right? And banks, they take this money and they pay back the government at a 4.25%. And the banks give us, regular people, the money for a higher interest rate, and the difference is their profit, right? So that's what we mean. And why is this important? What's up? Wait, what was that? Exactly. That's exactly it. So that's how they make money. And why is this important, right? If interest rates are low, then what do you think would happen? What would people do if interest rates are low? I'm asking you that question. Yes. So if interest rates are low, regular people, they're going to be more enticed to go out and spend their money, right? It's easier to borrow money. They're going to have to, spend, they're so it's easier going to be it's just easier going to be it's just sorry, I'm fucking like short circuiting. It's easier to borrow money. That's it. Right? Easier to buy a car. House prices, your mortgage payment, everything is going to be cheaper. That's why interest rates were at 0% during COVID, right? To stimulate the economy, right? We had 0% interest rates during COVID time. So that's the reason why it stimulates the economy, okay? And if we raise interest rates, then it's harder to borrow money. Just the exact opposite, right? So that's why the FOMC statement and the press conference is all really important, because it takes into inflation, unemployment, and all of that together, and that is a big market mover. Our FOMC, like the market is extremely volatile, so you don't want to be trading for too long on those days. On Wednesday, it's always on a Wednesday. We don't want to be doing that because it's very, very easy to destroy your account. So, and then we have our GDP as well on Thursday. And then we have unemployment stuff and core PCE. So it's all related to inflation and consumer sentiment and overall. Oh, are we in a recession? We're gonna know that on Thursday. So, if we're in a recession, there's like a certain criteria that we have to meet, and so we very well might be, but we're strictly talking about data here, and through that data, we're not, but definitely through people's sentiments and minds we are, but the market, I'm talking strictly in like trading and financial terms, right? So that's what I mean. Like, we're not in a recession yet, but we're getting there, we'll get there eventually. So we can play it, right? So as sad as as sad as it is to say, if we are in a recession, you and I are going to make a lot of money, you know, especially now that you're trading. It's very easy to make money when the market is going down. You come in every day and you click the sell button and you just put your hands on your head, you sit back, and it just prints money, So yeah, as sad as it is to say, if anything bad happens, it is very easy to make money compared to when something good happens, right? It's really hard to make money in this situation here, but it just gaps up and you have no opportunity to get into. This is a $4,000 move, by the way. So if you get in here and then you had enough money, but to open this position overnight, you need like $250,000 minimum, right? Those are the only times. Those are the people who are allowed to trade, because you can make a lot of money here, but you can also lose your entire life savings here also in this move. So that's the news we're having. We have our GDP and we have our FOMC statement. So I'll send you some videos. There's a guy, he's a financial guy, but he explains everything in like a meme way, and with stick figures and on Microsoft Paint. So I like watching him. So I'll send you a video link, and you can watch it. It's pretty much what I explained. He's going to talk more in depth about the dual mandate that the government has been after for a long time. That's another concept: inflation versus unemployment. So yeah, it's gonna be it'll be good for you to watch. But Forex Factory, I want you to remember. That's an important website, and if it's also built into our trading view as well. So I have it here, pinned always. So all the USA news, it'll show up there too. It's the same thing. So yeah, it's you can. Oh wait, I don't think you can do it though. I don't know. I'm not sure. You can go and try. You create a new tab and you click on, news or whatever is there, or calendar or something like that. See if you can open that, because you're on TradingView free. So yeah, maybe. But yeah, any questions you have? I know it's a lot. Again, every time I talk to you, it's a lot, but hopefully it gets easier and easier as time goes on. That I can promise. On TradingView, yes. So you can adjust the filters, but Forex Factory is also pretty straightforward. You do it once, it always stays there. I have it, bookmarked and stuff. So yeah, that's about it. Any questions? Yeah, so there we go. See it. So I like TradingView because it gives you like the week's news for like US or whatever, like all together. So no news for us Monday, Tuesday. I don't know why it's not counting our FOMC statement on Wednesday, but I don't know. But it should be there for Wednesday. Weird. It's not there. But yes. So I'll call you in the morning on WhatsApp, and so Friday was pretty slow for us. Well, me too. I didn't hit my target perfectly, but even my like reduced target perfectly. So yeah, we'll try to make this week good, because usually on weeks where there is news, it's usually pretty good. It's a pretty good week. Moves tend to be bigger, faster, stronger. You know what I mean? So yeah, so I'm looking forward. This week's gonna be good, and it's gonna be really tough for me to trade. I don't know what the internet's gonna be like when I'm in India, because after this week on Monday I will be in India. No, second. I leave on Sunday, a week from today. Yes, so I'll be with you trading this week for sure, and I'm leaving to Bellevue on the 1st, so on Saturday. But when I'm flying, I don't know if I'll be able to trade even. Man, that's going to be weird. Me not trading. Because I won't have internet, I think. Maybe I'll buy internet to trade. But yeah, I don't know what the internet will be like in our new house. I haven't been. But my time at 5 p.m. in the evening is your 6:30 a.m. So if everything's good, it's going to be so much easier for me to trade. Cause yeah, it's the daytime for me. Yeah, I'll be awake and all that. So I'm like looking up ways how to avoid my jet lag and stuff. So yeah. But yeah, that's all I had for you. If you have any questions, send me a voice memo and on Snap, and I'll send you those videos to watch. It's interesting, and it's important for you to know now. So yeah, all right. Okay, I will talk to you in the morning. Okay, bye.